Federal taxes. I know you love them. I love them. And so we are going to talk about them today and exactly what our federal tax brackets in the USA mean. We'll walk through a couple case studies on it. I hope this is helpful. This is an educational channel overall. And so that is the goal that we're going to do. Not political. Okay. I don't want to hear that. I just want to educate you on federal tax brackets. And so what we're going to do today to start with is, if you have never seen them before, you just give your stuff to your accountant. You either owe money at the end of the year or you get money back. We're going to understand our federal tax brackets in the USA. And so where I love to go, the site that I like, is NerdWallet. I think they do a great job breaking down the brackets in a simple way and the math on how much money you owe based on your income. And that's where we're going to start today. So first thing that you need to know is these tax brackets change every single year. Sometimes it's by different percentages. Typically they follow inflation, but they typically increase every single year as far as the dollar amounts go. Okay, that's important to understand. Not the percentage brackets themselves unless we have tax legislation, but the dollar amounts, okay? And so in 2025, those are the brackets we're going to use when we file taxes in 2026, all right, due by April 15th. And so looking at the 2020-25 brackets, we are going to notice some different columns here, all right? The first thing to notice is on the left, we have the various tax rates that you pay in only federal. I can't stress this enough. It's not Social Security, it's not Medicare, it's not state income tax. Federal only, all right? You're going to see the lowest amount of federal tax you can pay is 10%, and the highest is 37%. So if you have $100, at worst, you have to give away 37. At best, you give away 10. All right, that's how this thing works. It also has here the different filing statuses: single, married filing jointly, or if you're a surviving spouse, had a household, and married filing separately. Okay, we have our different columns. Why those matter is because it changes the different amounts of income that you can have in each bracket. Okay, and so I'm going to try to explain this best I can. We'll do a case study on it. Everybody pays the same amount of tax on the way up. Okay, it doesn't matter how rich or poor you are, you pay the same amount of tax on the way up. So for example, everyone, if you are a single filer, is going to pay 10% tax on the first $11,925 of money that you earn to the government. Okay? Once you have filled that bucket up with income, you would then move to the 12% bracket. I circled that poorly. Once you fill this one up, you move to the 12% bracket. That does not mean that all of your money gets taxed at 12%. It only means that the money above $12,000 and below $48,400 is taxed at 12%. Then if you make more than this, the next amount goes to 22%. So that's a bigger jump. And that is from 48 to 103 income earned. So everybody on the way up pays the same amount of tax, but we progressively get higher. That's what the USA system is. And then for a married couple or a surviving spouse, you are going to see higher income thresholds. That is how our tax code works. So if you're single, the 12% bracket ends at $48,000. If you're married, it ends at $96,000. That is the advantage to being married in our tax system. If one spouse works, one doesn't, you still get the bigger brackets. Okay? So that is how our system works. We are going to go through some examples so that you know or understand how to calculate federal tax. I know there's tools out there to do this for you, but I just want you to understand how the system works overall. Okay? And so the first one that we're going to look at here is we are going to use a single filer, and we're going to walk through with 2025 numbers, okay? So in 2025, this person is going to make $75,000. I don't care if you are an hourly worker, a salary worker, whatever, you made 75 grand. Cool? Now, everybody gets what's called a standard deduction, which most people take since the tax act back in 2016, the Job Cuts and Tax Act, whatever Trump put in place in 2016. Most people take the standard deduction now because itemized deduction, it's too hard to pass the standard. If you have no idea what I'm talking about, the standard deduction is just an amount you can reduce your income by for free. So the government says, hey, even though you actually made 75,000, we're going to let you reduce your income by 15,750 if you're single, just cuz. That's what our government does. That's what standard deduction does for you. Okay? So, in this example, we made 75. The new 2025 numbers, standard deduction is 15,750. That's after the new Trump One Big Beautiful Bill just went in place, okay? For 2025. So if we take those two numbers, we are going to get what's called taxable income of 59,250. So according to the IRS, the government, I owe federal tax on 59,250 in this scenario. It's a very basic scenario. You'll have other deductions too, but we're just doing basic right now, okay? So now, how much tax am I going to owe? Well, if we go back to the brackets, you're going to notice that if you're single and if you make 59,250, that is going to fall in this bracket, which means that you will end up paying at the end 22% tax. That's their final dollars, the final bracket you will end up in, okay? It's not what you pay the whole time, just what you end up in. I think it's important to understand, all right? Going back here. So, how to calculate this? Again, there's a bunch of tools, but I want you to know how to do it yourself. In the first 10% bracket, everyone pays 10% on the first 11,925 of income. So everyone who makes over that will owe 11,925 in that bracket, okay? We made more than this, so then we move on to the next bracket. We have 12% bracket for a single filer is about 11,925 to 48,475. We will also fill up this entire bracket, so we will owe $43.86 in federal tax for filling up that bracket. So we have now filled up the 10% bracket and the 12% bracket. So anyone who makes more than $48,475 and is a single filer will pay the same amount of tax that you do federally. All right? Now here's where we end. We made 59,250 according to the government after our standard deduction. And so we will then end in the 22% tax bracket. So from 48,475 to 59,250, that amount will get taxed at 22%. So about 11 grand, even though we are in the 22% bracket, only $11,000 of our money gets taxed at 22%. Okay? And so that ends up being 23,750 in that bracket. When you add all of these up, you would get your total federal tax owed of $79.49. What I like to do then is take that number and divide it by our original income, our gross income, to kind of get like an effective tax rate. And so your blended federal tax rate would be about 10.6%. So here's what I want you to understand. Even though you ended in the 22% bracket, on your $75,000 income, you only ended up paying 10.6% federal tax. Okay? That is what I need you to understand our federal tax system from the single filer level in this case. Let's move on to a married example. Okay? So here, I have a married filing jointly example. So now if we go back here, we are using this column with some different income numbers, which is important. That is important to understand. You can't use the single brackets, you're filing married. So let's assume, I don't care how, but the married couple makes $150,000 together as a household. They get the standard deduction twice. So back here on the single one, it was $15,750 was the standard deduction with Trump's new tax bill. Now, if you're married, you get to double that, 31,500. So even though this couple made 150, on paper to the IRS, they only make 118,500. Okay? Then we have to figure out in those married brackets, where does 118,500 fall? If I was single, it would fall in the 24% bracket, but we're not single in this case. We are married. And so the 100 and whatever thousand, I think it was 118, falls in the 22% tax bracket. You can actually make all the way up to 206,000 to be in that bracket. All right? And so now, once we go back, you're going to notice that for the 10% bracket, we can make up to 23,850. Everyone who makes more than that and is married will pay 10% tax on that money. Then we move to the 12% bracket, which goes all the way up to almost 97,000. And so if you make between or over that, you'll pay the full 12% tax in that bracket of 8,700. And finally, we terminate in the 22% bracket because we made 118. And if I go back here, that bracket went all the way up to 206. That is where we will end and finish with our 22% tax. We will pay only about, what is that, like $22,000 we'll pay 22% tax on. And so we will end up owing $47.41 in that bracket. And so total for this scenario, I owe this 2,000 plus the almost 9 plus the almost 5, 16,000 of federal tax owed. And again, if we do a similar blended tax rate, all I have to do is do the 15,900 divided by the $150,000 gross income, and we get a blended tax rate of about 10.6%, which if we go back to the single, it's the same thing because we used half the income over here. So even though the single person only made half as much, they paid the same blended tax rate as a married person because the married people have the higher brackets that they can use. That's another key thing to understand. So looking back at the federal tax brackets, what I want you to take from this video is that everyone pays the same amount of tax as you go up these brackets. You have to know if you're a single, married filing jointly, head of household, or married filing separately filer. But I want you to understand how our federal tax system works and how to calculate your federal tax liability. I hope overall doing a single, married example is helpful. Those are the most common examples that we have. And if you want to see more on this, let me know. But other than that, Chris Lee, Everyday Finance. Hopefully this is helpful on federal taxes. And I will see you in the next one.